Good day, crypto trader. Bitcoin rips below $20,000 and opens a fresh can with more losses at hand. Bitcoin, BTC, price has said its goodbyes at $20,000 after a few very choppy trading days. With $20,000 in the middle of the range still at the end of August, it was at the start of September that the beloved psychological level started being mentioned on the top side of the intraday price action. Slowly but surely, Bitcoin price slipped below it, and after yesterday it is time to say goodbye to $20,000 for now, saddling up bulls with massive losses and negative P&Ls to come. Bitcoin revisits 2020 all over again. Bitcoin price sees bullish support breaking down as price action tanks 5% into the close of the US session. Bitcoin bulls seem unable to withstand the market turmoil as the European energy crunch pushes equities globally back to the lows of 2022, and dollar strength regains power after a brief pause. With an opening below $19,036 and no real test to the upside on that level, $20,000 looks far off now. BTC price by this move is entering a new area with more downside. There are not many handles to go on, as only one near $18,000 falls in line with the monthly S1. That level is likely to be tested for support, with the base for this new trading area coming in near $16,020, which falls in line with the low of November 6, 2020, and encompasses around a 16% decline. Alternatively, a turnaround could still be possible if bulls buy the dip and every price in sight below $19,036. A quick spin around could result in price action back trading above that level and looking to reclaim $20,000. That would make sense as the relative strength index is trading on the oversold boundary and is therefore possibly poised to bounce off and move higher. Ripple price crushes bulls' dreams as European energy crisis heats up. Ripple, XRP, price action slipped overnight in the last trading hours after sentiment shifted 180 degrees as geopolitical issues flared up again and energy issues reached boiling point in Europe. Headlines that speak of a Lehman collapse amongst energy suppliers in Finland, along with Turkey's President Erdogan speaking harsh words about the possibility of a military intervention against Greece, and Putin committing to fully cutting off gas and oil supplies to Europe, piled on the pressure. It is not surprising, therefore, normal that markets should roll over on the back of all this negativeness and take a nosedive as investors start to hoard cash. XRP price is no match for dire geopolitics. Ripple price dropped another 2.5% already during the Asia-Pac session, whereas the European session is bringing some relief for now. Support for bulls has been broken, and once the US session gets underway, expect to see a continuation of the downturn. XRP price is thus at risk of printing bigger losses as support for bulls at $0.3182 that held overnight has broken this morning. XRP price will now look for the nearest level of support where bulls will want to buy. That level looks to be near $0.3043, which is still 5% away and could be tested later this afternoon, if the US equity session gets on the back foot. To make matters worse, the ECB is set to issue a rate hike again on Thursday, and with a history of not so good communication, that could even be a catalyst that could trigger XRP to trade below that $0.3043 pivotal level and test $0.2900 to the downside. Alternatively, markets could start to look beyond these negative headlines and focus on the upside as Europe is trying to address the energy issues while diplomatic talks get underway between Greece and Turkey. XRP price could easily see bulls buying the dip and making it a false break, with price action trading back up above $0.3300 near term. Friday could then see a restoration of the upside price action, with XRP price trading near 35 cents around the monthly pivot as the benchmark. Cardano surpassed by this asset as Aiden notes another 8% drop in 24 hours. Although many cryptocurrencies have lost significantly this year, Cardano will always be amongst the topmost assets as its troubles still have not ended. Even the arrival of its most important upgrade, the Vasil hard fork, has not triggered any rise or recovery for the asset, which was come to be known as the third-generation cryptocurrency. Cardano community backs off. One of the most important parts of Cardano's ecosystem is its community, and over the last couple of months, most of the users have begun pulling their punches. The overall presence of ADA holders noted across the network has reduced to just 62K on a daily basis, which once used to be as high as 158K on average. The series of crashes since January resulted in this decline. Consequently, as investors began disappearing, the overall transactions on the network reduced significantly as well. At this moment, total transactions every day have come down to 63K, making the active investor to transaction ratio near 1:1. The reason why this is important is that an asset is fueled by the bullishness of its investors, and given Cardano's present condition, it needs as much support as it can garner. As it is, the lack of recovery on the charts has resulted in the cryptocurrency losing its position to XRP, which surpassed ADA in terms of market capitalization over the last 24 hours. This will make the former a more favorable asset for the investors, which could further cause a drawdown for ADA. This is where Cardano could be headed. Ahead of the Vasil hard fork, which is scheduled for September 22, there are a lot of possibilities about where ADA could be headed. However, the most crucial move for the altcoin at the moment is to gain strong support in order to sustain the unprecedented sentiments that would come with Vasil. This strong support resides above $0.600 since it not only brings ADA closer to the support range but also flips the 23.6% Fibonacci level into support. If ADA can manage to keep above the $0.409 support line over the next 2 weeks and bounce off the $0.520 mark, it might be able to make it to the support range between $0.595 and $0.747.